Want to share with you my gold analysis because gold is getting very interesting. As we all know, it is the possibility of a slowdown in the economy, a slowdown in the markets, and this is attracting a lot of attention for gold investors, for gold buyers. As we know, when the economy is slowing down, people start to turn to gold or to other precious metals. So that's why we can see here that gold is rising uh, parabolic. So it is important to make an analysis, I think. But yeah, first of all, remember that this is not financial advice. Please do your own research before you buy or sell any of the instruments that I mentioned here or that you prefer. All right, so what do we have here on gold? Here we are on the weekly chart, so a high time frame, sorry. Uh, what do we have here? First, we saw here that at this level, we had several touches. Gold tried to pass here 1, 2, 3, 4, 5, 6 times, and probably in the 6th or 7th time, it managed to break up. So then we break up, we went to the next level, which is this level marked here, and then here we are battling, we are still battling, and we went to make an all-time high, and then we went down, and currently we are the third touch on this to this level, to this resistance level, to the all-time high level, and it looks like we can break up this resistance, and then we will make a new all-time high. When is this going to happen? Well, that's the interesting thing, because look at this. Here we are in a range, so we have several options here. So first option is that right now everything looks really bullish, and then we just go directly break, take this as a support, and make a new all-time high, and then we make a new level here with like doing a ladder. Then we have a new step, and then we make a new level here, and we stay up here. That's one possibility in case we are super bullish. The other possibility is that we come down again to touch this support. Obviously not straight down, so something like this, and do something like this, and then we come here, and then from here we stay in a range until we manage to break up again or we break down. That is the second possibility. Third possibility is that we go all the way down, something like this, and then we come here, and then we go all the way down to grab this liquidity. Because look at this, look at all this liquidity. This is liquidity that is standing there to be grabbed. It doesn't mean that we have to take it, because for instance, look at all this liquidity here that was never taken. It will probably be taken in the future, it probably will never be taken. So there's always liquidity that gets trapped here. For instance, this one was taken here, but this one that we have here, it has never been taken. So, and the same happened here. Look at all this gap and liquidity gap that we have here. So the market might be wanting to come here and grab this liquidity. Also, another thing is that we are really far from the EMA. So we are really far from the 55 and the 200 EMA. This is a weekly chart, and as you can see here, we never get too far. When we get far from it, we go down, touch it. When we get far from it, then we go down, touch it. So we still have the possibility to come down here and touch this. So if we go down to the daily time frame, we can see here we are not far from the 55 EMA. We are touching actually the 55. We are using the 55 EMA as support. So it can be that before we go up and make a new all-time high, we come down here and we touch again the 55 EMA to find support again and then take impulse. Or it can be that we go and touch the 200 EMA. It's been a long time since we don't touch the 200 EMA. Last time was in October 2023 that we formed this structure to jump up to the next level. So it might be that we come here to touch the 200 EMA, something like this. If we project this might be like this. So we come here to touch the 200 EMA to form a structure, an accumulation, and then we can jump to the next level. So we have to see that. But that depends a lot on the DXY, the dollar index that we can see now. The dollar index, because as you know, the gold moves opposite to the dollar index. So if the dollar goes up, the gold goes down, and vice versa. So, and what moves the dollar index? The dollar index, what moves the dollar index at the moment are the interest rates. And as we know, we have an interest rate decision by the American interest rate by the Fed on the 24th of September. So it is very important to pay attention to that date. Put it on your calendar, and then you can pay attention to what happens on that day. Because if the Fed decides to maintain or keep the interest rates as they are, it is very unlikely that they are going to raise. So it's more likely that either they keep it or they lower. So, but if they decide to keep it, then the dollar will rise again, and then this is what will send the gold down. So that will send the gold down probably to this level to touch the 55 EMA on the weekly or the 200 on the daily. And then the DXY, the dollar, will go up and then probably touch this resistance level again, probably go up, make a fake out, or continue up. Because, you know, look at the dollar index, we are here range bound for a long time. Since November 2022, we've been range bound here. So if that is the first possibility, if the interest rate doesn't change, everybody's thinking, and the biggest probability now is that the interest rate goes down. That's why we can see that the dollar index been coming down. So everybody is expecting the interest rate to go down, and that will send the dollar even further down. So we will touch probably the 100 level, this resistance level, and we see if we find support here and we go back up again, or if we definitely break down. So if they think that the interest rate will continue in the next the cuts will continue in the next meeting, so we'll probably do something like this and then go down and break down this 100 level. So if we have two rate cuts this year, this is the most likely thing that we see that the DXY will jump to the next level, which we can draw here. We can see that here, for instance, somewhere around here is where we have the previous support and resistance area. So we can here support, 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 resistance, support, resistance, support. So probably we jump to the 95 level, let's say. So that's why it is very important to pay attention to what happens with the interest rate, because this will move the markets and, more importantly, move the gold. So at the moment, oh, by the way, so if this happens, so if the interest rate comes down, this will send the dollar down, and this is what will send the gold up. So then we will go quickly up to the next level. So in the short term, well, from here to September, what can we expect? Well, we can probably expect a bit of volatility here in gold. We'll see maybe attempts to break this, maybe failed attempts. We will touch again, come down, or maybe we will go directly down to grab all this liquidity, maybe touch the 55 EMA and grab this liquidity until the interest rate decision. So at the moment, I expect to be range bound here a little bit until the the Fed's decision. Okay, well, thank you very much for watching, and see you in the next one.